So here's an interesting article regarding some silver, or not some silver, silver by silverdoctors.com. 3 signals for a huge silver spike in 2014, and he says, has JP Morgan gone massively long silver? While the average price of silver remains at a multi-year low, there are several indicators pointing toward a much higher price by the end of the year. If we look at the 3 indicators signals together, we can see something big is getting ready to occur in the precious metals market. The first involves what appears to be evidence that JP Morgan has gone massively long in silver. Currently, and this is from the SRS Rocco report, currently the average price of silver so far this year is $20.17, a few cents less than the $20.19 said in 2010. A few cents less. I realize many gold and silver investors are a bit skeptical and worn out from the same old bullish rhetoric coming from many of the top precious metals sites. However, it's extremely difficult to stay positive when most investors are what I call fickle to the bone. In the 12+ years I've invested in the precious metals, I've seen the highs and the lows in market sentiment. Through it all, I have never stopped trusting the long-term fundamentals of silver. Same with me, and I've tried to explain this many times throughout these years. Stand strong, don't listen to the price. You see how these people manipulate stuff, you see how it's all propaganda. Just stick with it and wait. You will be rewarded handsomely. I truly believe the best is yet to come. That being said, I have come across 3 indicators, or should I say positive signals, that point to a much higher price of silver by the end of the year. Of course, this is speculation, but when we add them together, it makes for a pretty solid case. The first signal comes from the work of Gene Arensberg at goldreport.com. I've followed Gene's work for years, and I have to say he is about as even keel as they come. Gene just puts out the data and leaves emotion aside. No hype, just strictly business. According to his recent article, COMEX swap dealers hedging a massive long play on silver, he stated, "I'll tell you what, people, I like the action. I guess short-term anything is possible, but this looks like a bullish setup as I've seen in decades." For Gene to say this looks like as bullish a setup as I have seen in decades, he must have good reason. Gene shows the chart below, which shows how many short contracts the swap dealers have added in just the past few weeks. The blue line represents the amount of short contracts, and the pink line is the price of silver. As we can see, the swap dealers' short positions shot up to a record 57,000 contracts. The swap dealers are the bullion banks, but Gene believes a lot of the new shorts were added by Goldman Sachs and not by the typical player. At the same time, the swap dealers were adding a great deal of shorts. The managed money traders, large speculators, hedge funds, etc., covered a great deal of shorts and added longs, shown in the chart below. Here we can see that the managed money traders' short positions dropped from a massive 43,000 down to below 10,000 contracts. Again, according to Gene, that tells us a few things, not the least of which is the funds traders became convinced in late June that the downtrend, which had been in place since February, had ended and it had been replaced by a nascent uptrend. Otherwise, the trend following funds would have no reason to cover their short so fast. Basically, what Gene is saying is that someone took the long side of the swap dealers' massive short positions, and he believes they have to be huge to do this. So in his words, if the combined swap dealers have used COMEX futures to hedge their swaps, then who in the Sam Hill took such a giant long position via swaps? Whoever it is has to be huge, and whoever it is not going to be run out of town by paper sellers. Not if I'm right about who I think it is, and I'm not saying just yet. Gene isn't saying it who, but I believe it's JP Morgan, they say. Andrew Maguire discusses this as well in his recent post interview with King World News. He believes the bullion banks such as JP Morgan are winding down their short positions due to the Volcker rule, which forces more transparency, which means the banks will have to provide legitimate hedging. So as the typical large bullion banks reduce their shorts, Goldman Sachs and other institutions in the swap dealers categories added massive numbers of naked short silver contracts. Both Andrew and Gene believe the current situation in gold and silver markets are extremely bullish for much higher prices coming ahead. The second signal is the work by a trader, Bo Polney, who Jim Sinclair stated was one of the 2 traders who called the top for gold. Not only did Bo Polney call the top in gold, he also called the top in silver within 2 hours. Bo called a move higher for gold in May and June this year, a low in the summer, thus far he's been right, and then a spike up with a huge move to $2,000 by the end of 2014, this year. That's his call. He says that gold is in a 21-year bull cycle and the next up leg starts this year. Not only did he call the top of gold and silver in 2011, but he also called the bottom for both metals in 2013, according to records on his website. To set the record straight, I don't place much merit in technical analysis. However, I still admire those who can use them to trade. Bo goes on to say that gold will hit $10,000 by 2020, after hitting $2,000 by the end of the year. So we'll stop at that one. And the third and last signal is due to stock purchases of a well-known billionaire trader. In the Motley Fool article, Bet Like George Soros and Cash In on a Silver Rally, the author Matt Smith stated, quote, billionaire investor, I've mentioned this to you before, about old George Soros, has already made some big bets on precious metals and silver miners in particular. He invested $9.4 million in precious metals streamer Silver Wheaton and $10.7 million on miner Pan American Silver. Not only did Soros purchase Silver Wheaton and Pan American Silver, he also bought some of the top gold shares such as Barrick, Goldcorp, and Yamana Gold. While these are not huge purchases, they represent a step in the right direction. I would imagine as the prices of the mining shares move higher, Soros will be adding more to his portfolio. If we look at all 3 indicator signals that we just discussed together, we can see something big is getting ready to happen in the precious metals market. Plain and simple. I have to, of course, strongly agree with all of this. Number 1, if there's only one of those signals that you need to follow, if there's only one, that one actually is, believe it or not, is George Soros. It's not the other indicators, the guy that called the tops and the bottoms, who has a very good track record. It's not even those guys, not even those first 2. It's the George Soros connection. When George Soros bids on something, buys shares in something, sells something, whatever he's doing, you better stop and pay attention if you want to figure out what's going to happen with that sector. If he starts going into gold and silver are going to go up in price. There is not a chance in hell that the price of gold and silver in the future, not very long either, is going to just go down when George Soros steps in and starts making bets on mining companies left and right, buying shares all over the place, millions of dollars worth of investments. And as he said, this is probably just a beginning buying spree of George Soros to get into these companies, and then as the prices start to rise, he'll be buying more. Because I can understand why an elitist like George Soros would not just dump a ton of money immediately into it, because they know people are paying attention to what this guy does. And if all of a sudden George Soros, oh, you read, instead of 10.5 million on this company and 10.5 million on that company, and then some more in these other 3, if you heard, oh, George Soros just bought, $500 million in a silver, Pan American Silver Corporation, and put another $500 million in, Wheaton, whatever. I mean, wouldn't you stand back in awe at that point? Wouldn't a lot of investors stand back and say, okay, we know where this is going? The mainstream media, would they even be able to be quiet on that kind of a move? No. Probably not. Even they probably would have to say something. So if he just sneaks in there, hopefully no one's looking. I'm just going to buy a little bit of shares in these mining companies for gold and silver. Top miners, top producers. That is the only thing, if you leave this video with in your mind, if you leave with one thing, this is it. George Soros once again made that bet, and just like I said before, earlier this year, he took a huge short position out on the stock market, S&P. He took a huge short position out on the S&P. Why would someone do that when for the last several years, stock market's been rallying? Yeah, it goes down a little bit, but it goes back up higher, goes down more, it goes back up higher. Therefore, it is on an uptrend, period. Who in their right mind would bet against that? The absurdity, because no matter what the reason is, good news, bad news, wars, this, that, doesn't matter. Market is just rallying. Bad economic data, bad GDP data for the United States, it doesn't matter. Market rallies. Why? Because it's rigged. But who cares, you might say? Who cares if it's rigged or not? If it's going up, who cares? And you might even have a point. But I'm going to answer that and say, who cares? You're going to care if you're into it when they decide to stop letting it rally and let it get destroyed. That's when you're going to care. And that's when you're going to cry, oh, it's rigged, it's rigged. But you weren't crying that when the price was going up. Now were you? When the stock market was going up. Which is why you should have been sitting in the sidelines, taking your cash, not investing in the stock market, investing it in silver and gold. Stockpiling and stockpiling and stockpiling. Because that big shot, that big moonshot, whatever you want to call it, it's coming up. And George Soros just proved it. You remember a while back too, he got rid of all, I did the video on this too, he started dumping all of his bank shares. JP Morgan, all the big banks he was invested in, dumped all his shares, went elsewhere. Why would you do that? Why would George Soros do that? I thought the banks were doing very well too. I mean, didn't the banks rebound by like double what they were at the low, 2009, etc.? Aren't they way up again? I mean, why would they go down? Goodness. Because they know it. These things aren't just some natural occurrence like, you know, the weather changed today and, you know, these things are staged, they're planned, they've always been controlled by the same banking bastards, bankster bastards, what we're going to call them, throughout history. These are the riggers, these are the market manipulators. The only difference that changes, just like all other history, is technology. We're still stupid humans with ego problems, and as we get more and more money and wealth, the ego, it automatically inflates and becomes big, and then as you get even more filthy or rich, the money thing doesn't even phase you anymore. You need something bigger, something to stroke that ego even harder. So then you start going after power and control of other people, which is where we're at today. These people want nothing. They don't care about their wealth anymore. They care about their power and control. The wealth comes automatically now. And again, they're not just going to share this information with you and I. You know, as George, was it Carlson? Said, George Carlson, the old late great comic. It's a big freaking club, but you ain't in it. It's true. It is a big club, and you ain't in it, neither am I. But if you can stand on the outside and put your ear up to the door and listen to what the club's talking about inside, aka what buying spree did George Soros just do? Oh, he's getting into gold and silver. Oh, it looks like one of these big banks is now going long in precious metals. I think it might be JP Morgan. Oh, you may want to pay attention, right? It's going to be the biggest upset of all of our known recent history, especially. And I mean, going back a long time, from now till a long, long time ago, back when none of us were alive. It's going to be the biggest upset in probably world history when they see where the prices of precious metals go. It'll be the biggest shocker in all of history. And the only people who are going to benefit are those with it. And don't have it on paper. Don't say, oh, well, I've got a 401k that's attached to the SLV or GLD. Again, if it's written on a piece of paper, Lindsay Williams said it ain't going to be worth much more than the paper's worth itself. It'll be interesting to see what happens with the SLV and GLD, because I just have a sneaky suspicion that they will close those down sooner or later. I just have a sneaky suspicion they'll close that vehicle down. They reserve the right to do so for any reason. You get nothing but the paper price of what it's worth. So what I hope happens is it doesn't go that way, and somehow the SLV and GLD last in people who are invested in there through their 401ks, because they couldn't tell their 401k provider, hey, buy me physical silver. No, we can't do that. We can only play the paper game. So those who are invested in SLV or GLD hopefully get to experience the same thing the rest of us experience when the price of gold and silver go way up. This is one of those videos that's really hard to argue against. So, just pulled up at work, gotta go inside. Take care.